Ladies and gentlemen, Greg Mikulowski from ForexLive.com. I'm going to take a technical look at gold, something different, precious metal. Sellers are leaning on that as the dollar moves higher. Let's take a look at the technicals that are driving this precious metal. I'm going to start off by taking a look at the hourly chart. And if we look at the hourly chart and go back to this high, I guess this goes back to early August. We saw a trend move to the downside here, then saw a pretty significant bounce back rally through here, and that bounce back rally moved into this swing area, or this retracement area between the 38.2 and the 50% retracement. We found one high and two highs, and then the market rotated back to the downside. Notice also that the price on the correction moved above the 100-hour moving average. That's a blue line in this chart. We had held that 100-hour moving average here on the way to the downside and then moved above it. So the buyers were made a play, but they couldn't get above the 50%. They couldn't stay above the 100-hour moving average. It started to move back to the downside. We had one move above the 100-hour moving average here and then re-established resistance against it here. We held resistance against the 100-hour moving average here. We kind of got close to it here. We kind of got close to it here. And in trading here today, what did we do? We moved above the 100-hour moving average, but again, the momentum faded and we started to move back to the downside. So what now? If we take a look at this hourly chart, we are skimming along the bottoms here, the bottoms of from last week's trading and also this week's trading near the $1,884.60 level. We had now five different lows against that level, and as you can see, the price is just off of that level, currently trading at $1,889.52. So we are trying to hold support against the $1,884.60. If we move below that level, however, the door opens for further selling pressure. Buyers are trying to hold support. Now let's take a broader look at the daily chart. And if we look at this daily chart, what do we see? Well, what sticks out to me is this green line. This green line represents the 200-day moving average. And as you can see in trading last week, the market moved below the green line and held resistance against the green line on, I guess, Wednesday's trade here, and sort of wandered to the downside again on Thursday, Friday, and again today. Also, the price fell below the 38.2% retracement. I'll move up from this low to this high. That 38.2% retracement came in at around the 1903 level, and staying below that level today as well keeps the sellers more in control. We are also back below the low price that we saw right here. That was in the month of June, the June low before the market moved higher. So staying below that level is also key. That level currently comes in at the $1,893.12. So that level, the 38.2 and the 200-day moving average all the way up to 1908.11 will be the resistance level for gold going forward. If the price can remain below those levels, guess what? The sellers remain more in control for this from a technical perspective, and we could see the price wander back down toward the 50% retracement of the same move higher from the low price going back to this point right here to the high price up here. That 50% retracement again comes in at $1,848.37. That would be the downside target here for the price of gold. So on the shorter term, we're more bearish on the after failing to get above the hourly moving average. On the longer term perspective, we're below the 38.2, below the 200-day moving average, and looking more bearish as well with the 50% down at $1,848.37 as the next key target. That's my technical view of gold. Good fortune with your trading. Bye-bye now.